Ladies and gentlemen, good afternoon. My name is Mercedes Vela Monserrate, Head of Sustainable Finance at ADGM, and I'm delighted to be here with you today and with these distinguished panelists to discuss transition to net zero. To my left, I've got Sonia, founding partner at Venture Souk, Neil Lee, Vice Chairwoman of Carbon Direct and Chair of GFAN Advisory Panel, and last but not least, Tuka, Head of ESG for Europe, Middle East and Africa at JP Morgan. A warm welcome to all of you. Now, the topic of today's discussion is financing the transition to net zero. This is quite important for us as ADGM, as Abu Dhabi's International Financial Center. We are the place where the demand and the supply of finance comes together, and where green and sustainable products will need to be scaled up across all different types of sectors, whether we talk about fintech, asset management, banking, or insurance. As a result, we are creating a powerful cluster for change in full alignment with the UAE vision and the net zero commitments. Now, Tuka, let me start with you. What is the role of sustainable finance in supporting the transition to a greener economy?
Well, first of all, thank you very much for asking us to join this fantastic Sustainable Finance Day. Look, we have an enormous job to do to avert a climate catastrophe, and we don't have very long to do it. And ultimately, one of the nice things about this, in a way, is coming out of the global financial crash, financial services and its various different segments were seen to be the problem. Very much when we look to this big climate crisis we are having to deal with, the different segments of the financial services sector are absolutely part of the solution. Why do I say that? Because in order for us to get to net zero, a net zero world by 2050, and to hopefully keep the temperature rise to no more than 1.5 degrees above pre-industrial levels, the consensus view is that that's going to cost between $5 and $6 trillion a year, every year between now and 2050. You simply cannot raise that sum of cash through the public sector alone. Yep. And if you look, for example, just take Europe. Between now and 2030, the European Capital Markets Institute is forecasting that it will cost around 11 trillion euros to get Europe on the trajectory to a net zero world. Now, if you take the COVID relief package that we had during the pandemic, you put that together with the Green Deal monies that the European Union's put together, that takes you to no more than 2 trillion euros. So there's a massive gap there. And in order to fill it, financial markets are going to have a big role to play. Banks like JP Morgan will have a big role to play, which is why we've made some pretty major commitments, the biggest of any bank in the world, arguably, in this area, because we need to do our part. And look, this isn't philanthropy. This is because we need to do this. This is in the interests of our shareholders and, of course, our clients that are at the center of everything that we do.
Thank you, Tuka. But what exactly or specifically is JP Morgan doing to help the transition?
Well, we have committed to finance and facilitate $2.5 trillion between where we are now, actually started in 2021, going through to 2030 to deliver against the UN Sustainable Development Goals. And $1 trillion of that is reserved for climate. Just to give you a sense of our progress towards that goal, we delivered $106 billion worth of finance to deliver on the climate aspect, $284 billion worth in total last year, which means that we're not just in the business of making these commitments, we are absolutely determined to deliver against it. Probably where the kind of, from a financial markets point of view, it is most deep is around the different ESG labeled debt products. One of the interesting things is that in spite of what has happened this year, the geopolitical situation, the challenges central banks have with controlling inflation, the cost of living crisis, all the other issues, if you look at ESG labeled bonds as an asset class, they have actually proved to be more resilient than the broader market. So the the volumes in the broader market are down about 27%. But if you look at the ESG labeled bonds, it's down about 17%.
Yep.
And I still think we'll probably have, by the end of this year, just under $1 trillion worth of issuance there. So I think that just shows how much demand there is actually for assets in this space.
Indeed, there is a huge demand, and I think as mentioned by our CEO early this afternoon, we at ADGM have now published a consultation paper on ESG disclosures, but also on product requirements to promote the issuance of green bonds and the setup of green funds. Again, there is a need to provide clarity to the market as well, to all of you, as to what really constitutes a sustainable or green product. So we look forward to continue working with JP Morgan and all the other stakeholders to move the agenda forward. Now, Nili, let me turn to you now. Between COP26 and COP27, GIVAN has expanded, I believe, around from 450 to 550 members. Now, in climate solutions and clean tech investments, where Carbon Direct is focused, the field of opportunities is clearly expanding. What perspectives can you offer on drivers of growth in net zero finance?
I also want to add my thanks to ADGM for hosting us, and to you, Mercedes, as well as our moderator and hostess. When you look at the expansion across the financial services industry in leaning into our transition goals, of course, finance understands that we own the systemic risk that is presented by climate change. It's not really possible to hedge your way out of climate risk. And so we want to be a part of the solution. But then, of course, financial sector leaders are also starting to appreciate the great deal of opportunity that will be presented, not only in financing the transition out of the high emitting economy that we have, but also in building the new green economy that we want to step into by 2050. So in order to accomplish this, our founding vision at Carbon Direct is that it will require a great interdisciplinary effort to be able to achieve our goals. Finance sector leaders are stepping up to work with industry, companies in the real economy, to work with scientists, and to work with policymakers to create the ecosystem response and effort that we need to respond to this ecosystem challenge. And so when it comes to the very important points that Chuka just made about the scale of private capital that will be needed to come to the table to be a part of this solution, it's very important to note a few key inflection points that are making this space increasingly investable for private finance, and in the climate solution space in particular, which you mentioned, Mercedes. At Carbon Direct, we are growth equity investors in private technology companies that are creating the solutions to build the green economy that we want. So 3 key inflections that are important. First of all, demand. With all of the corporations that have made net zero pledges since before COP26 and after, these companies are now procuring the technologies and solutions that they need to deliver against their interim decarbonization targets. And as that demand rises, economies of scale are tipping, which is bringing down costs and improving unit economics. The second is supply. Technology itself is continuing to advance, which is also bringing costs down and bringing more solutions into the field of investable opportunities that private investors, private capital, will be able to consider. That's very important. And here the role of scientific and technical expertise partnering with capital is particularly important in identifying the most viable solutions. So at Carbon Direct, we're employing over 30 carbon scientists who help to evaluate the types of technologies and projects that we support. And then last, but certainly not least, policy. We now have about 50 carbon pricing regimes around the world. Greater convergence and collaboration will be important in organizing that, but policy is stepping up in terms of carbon pricing. In the US, we just passed a huge package, almost $380 billion of tax incentives in the Inflation Reduction Act to break down the green premium that exists for scaling up solutions like green hydrogen, carbon capture, carbon dioxide removal, and things like this. And so all of these things are working together to create an increasingly favorable environment to crowd in the private investment capital, just as Chuka was describing, that we need to continue to see.
Indeed, and one of the issues we're looking at here as well at ADGM is how we can bring innovation with sustainability to scale up the agenda. But very briefly, Neely, just out of curiosity, are there any specific technologies that you are most excited about?
So probably like many people in this room, very excited about green hydrogen.
Indeed.
Of course, green hydrogen is a cross-cutting solution that can be a transition asset for many high-emitting industries. The IEA estimates that it will cost $1.2 trillion in investment in green hydrogen by 2030 to be able to achieve our long-term pathways, and that money is starting to step forward. In the US, we now have the 45V provision in the Inflation Reduction Act that provides a tax incentive of about $3 a kilogram for green hydrogen production that is bringing this online at scale. We're also really excited about carbon utilization. I like to call it the circular economy of carbon. We have so much carbon we're going to need to be capturing and managing that if we can actually do something with it, that really adds to the economic incentive for capture, for managing it in the first place. One technology that we just invested in is with a company called R.A.C.E that takes carbon dioxide with green hydrogen to be able to produce sustainable aviation fuel. These are the types of innovations that are investable and out there working in the world right now, and we need to continue to see these scaling up over time.
Fabulous, thank you, Neely. And in fact, we have a session coming up that will cover carbon markets here in the UAE and globally. Now, Sonia, let me turn to you now. From an early stage VC investing into climate tech, what is your perspective in building a new investment playbook for the climate space out of MENA?
So, hello everyone. We're going to inject a little bit of energy because I know it's the middle of the afternoon. So for those who aren't familiar with VentureSouk, we've been around for 9 years, born in Dubai, raised in Dubai. We have offices all over the region now. A couple of years ago, we decided to take a more thematic approach with our investment theses, and we chose two themes. One is fintech, so we launched the first fintech-focused fund, and we launched, and I probably shouldn't say, it's not official yet, but we're launching the first climate fund. I guess
big announcement of Abu Dhabi Finance Week.
Sorry. So yeah, we're launching the first climate-focused fund with a global mandate out of the UAE, and it's early stage. So I think it's great here, actually, because you have a variety of perspectives, and we kind of all sit at different parts of this value chain. We're there, the early parts. So we're there to invest in early-stage founders. We're focused on seed and Series A. We're looking at food and ag tech, supply chain transparency, carbon economy, of course, and climate fintech. We believe there's a lot of intertwining, as Neely just said, between these subsectors as well. And so we want to capture that kind of those cross-pollination opportunities within these subsectors, across these subsectors, and help these companies grow. Of course, climate is front of mind with the UAE hosting COP28 next year, but it's nothing new, right? I mean, as you've probably noticed, it's getting a lot toastier. It's definitely a lot warmer right now this month for the UAE, and Neely will jump in with some data points after me on that. But we do believe that what the UAE is good at is actually acceleration. Yeah. And so even if the UAE may have been a little behind with regards to focusing on the climate space, it's very much in acceleration mode, and I think you're seeing that already with a bunch of announcements made.
Indeed. And Sonia, what about the application of ESG more specifically at an early stage? Tell us a bit more about that.
Yeah, so for us, and I think you guys will agree, you you have to walk the talk, right?
Yes,
It'd be very hypocritical for me to expect my portfolio companies to adhere to ESG if we're not doing it ourselves. So what we decided to do at Venture Souk is actually we have an ESG committee in place. It's made up of 1 GP per fund, 1 senior associate per fund, and 1 non-investment team member. We have quarterly KPIs that we need to adhere to. We're 60% female, so I guess from a diversity standpoint, that's good. But there's still a lot of work to do on the E and the G, yes. which some people tend to forget about. It's not just about the E, it's the S and the G as well. And so we're focused on that. Meanwhile, we also want to make sure that we have kind of consistency across our funds in terms of the types of questions and the types of expectations we have of the companies we choose to invest into, because we believe that if you can kind of help and support companies to start adhering to ESG at an earlier on stage in their trajectories, then they don't have to do the backtracking that we're seeing some of the later stage companies have to do now. And so it's kind of a two-pronged approach for us. It's looking at ourselves first, kind of introspective, and then how do we help our portfolio companies as well.
Fabulous. Now, still COP27 is still going on, coming to an end now in Sharm el-Sheikh, and we have COP28, inshallah, very soon, happening here in the UAE. A question for all of you, and perhaps let me start with Chuka. How does this influence the sustainable finance agenda in the Middle East, and what does it really say about the leadership role taken by the region, particularly ahead of COP28?
So, 2 things. I will be mightily surprised if, at the end of this week, there is a resolution to this issue about the extent to which the developed world pays for the developing world to transition, both in terms of the cost of mitigation, but the cost of adaptation to change that's already happened. So I think that's highly likely to still be quite a big agenda item, and I think that does put the UAE in a position to resolve an unresolved issue, and a strong position given the strength of the economy, but also it is part of the developing world, some would say. But secondly, I think one of the great shames, particularly of COP26, is that the oil and gas industry and heavy emitting industries, who some have pointed the finger at and said are the problem, but to my mind are a massive part of the solution, need to be more front and central in this agenda. Not least because, I mean, if you look at we're not calling them integrated oil majors anymore, they're integrated energy majors. They are amongst a few companies that can actually have the scale of capex required to fund the new technologies and the rest. So I think given where industry is centered in the UAE, and oil and gas has been a particular part of the economy here, I think COP28 provides a great opportunity to make sure that they are properly at the table and part of the discussion, instead of being painted as pariahs by one part of the environmental debate. And to my mind, actually, I mean, the UAE has been ahead of this agenda relative to other economies, not least because it has fitted with the vision of diversifying the economy away from oil and gas in any event. So I think it puts in a particularly strong position. I mean, it's fair to say, I mean, I've just come back from COP27. There is huge expectation of the UAE. COP28, everybody thinks is going to be the best run COP there has ever been. And of course, I have no doubt that will be the case. Inshallah.
Very good. No, I really like what you just said. We always cover that point, that it's about working with the polluter. It's not transitioning, it's about helping the polluter transition away, right? And not punishing the polluter. Neely, your views?
I'll refrain from adding comments about the difference in logistics at COP27 and COP28. I also just got back from Sharm el-Sheikh, and one thing I can tell you is that it was hot.
The data is coming now.
Both COP27 and COP28 will take place in the MENA region, where it's actually in a business as usual scenario, which is the one that we're in right now, warming 4 times as fast as North America and Europe. And so this really shines a spotlight in an important way on the human realities and urgencies of the work that we're trying to do.
Yeah.
It's really interesting also to think about the march across the COPs and the ways in which different presidencies set the agenda. At COP26, I sit in the leadership of GFANZ, the Glasgow Financial Alliance for Net Zero. People call this the Finance COP because the City of London is proud of the role that it played in financing the first industrial revolution. It wants to be central in being a part of thinking about how we finance the green industrial revolution. COP27 is presented as an African COP in many ways. Topics like loss and damage, a focus on the just transition are central to the agenda, and they need to remain central to the agenda because we won't be able to have any transition at all if it's not a just transition. And then when we fast forward to COP28, I hope that there will be a continued focus on the serious practical realities of the transition that we have ahead in the energy sector. How do we manage an orderly transition that winds down traditional energy but pushes into the future of energy and power in a serious way? It's written all over the walls. How are we transforming the future? And I think that this futuristic vision and energy that comes from the UAE will be a big part of what is essential in the next round. Not to mention speed. I'm so impressed with how quickly this country has built its industrial economy in just over 50 years. People say when it comes to the net zero transition, we now have less than 30 years to complete industrial transformation greater than the first industrial revolution, which took 80 years. And so the speed, the race, which is the name of today's event, that we have ahead can really benefit also from the cultural attributes of the community and leadership here in Abu Dhabi and the UAE.
Thank you. Sonia?
Wow, after that. So eloquently put, Neely. Obviously agreed, but I guess I'll keep it short. I mean, I think, you know, obviously the UAE sits within a wider region, and I really think that the UAE is ideally positioned to act as a unifier within that idiosyncratic region and really kind of head-on look to tackle some of the climate change challenges that we face, especially harnessing technology and creating that nexus between technology and addressing climate change. And so that's what I personally am looking forward to because that's what we invest in. But I think that in general, the UAE is ideally positioned to do that.
Indeed, and I think building on all of your comments, the UAE is definitely not starting from scratch. I mean, we are the home of IRENA, the International Renewable Energy Agency. We have invested over 17 billion in energy projects across 6 continents in the world. We're working on carbon capture technologies, hydrogen. So I think definitely the UAE will play a key role in collaborating and bringing together, very important, the public and the private side to move forward the agenda. Ladies and gentlemen, I think this is a great place to end our discussion. Remains only to thank all of my colleagues from AEDGM for making this wonderful week and especially the R.A.C.E Summit a possibility. A big shout out to Chris in particular, and of course, let me thank our panelists for your leadership, vision, and insight. It's been a great pleasure. Thank you very much.